Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 2nd of December, 2022. We finished out the week with a gain here induced by the Federal Reserve Chairman's speech. Pretty much green across the board for the week. A little bit of a loss in the energy names and financials, but let's take a look at the action here. Actually, before we do that, let's take a look at the year-to-date chart with some percentage moves on it. This is something I put together earlier today, and this is why I'm a trader and why I don't get excited every time the market rallies. I participate in the rallies, but I also participate in the short side. So far this year, we've seen a rally of 9%, 12.5%, 10%, 19%, and this one so far off the lows is at 17.8% from the low to the high. At the same time, however, we've seen 5 declines of over 10%. So we're still in a downtrend, and really, I'm not concerned about trying to pick the bottom. I never have been. I'm interested in making money in stock trading on a daily, weekly basis. So here's where we are in relation to the anchored volume weighted average price from the all-time high, and we've got that trend line just above as well. So the market continues to grind higher towards that level. The 200-day moving average is declining. We've had a good rally here the last few months. Again, it's from this low to that high is 17.8%. It's a reason to look at the market and say, we're possibly going to pull back in this area. Where have we come from? 18%. Where do we have the potential to go before we likely encounter a source of supply which might become resistance? We're in that area. So it doesn't mean sell short. It means consult your shorter term time frames and say, what is the market telling us? So this week we saw basically what you can now look at as a cup and handle here. And then when the Fed chairman spoke here on Thursday, was it Thursday? Well, I don't even remember. Wednesday, I guess it was. Wednesday at 1:30 Eastern, the market took off from there. It broke through this resistance and then rallied hard. Today we came back and tested that resistance. So that resistance held as support with a rising 5-day moving average. I've also got the anchored volume weighted average price from the Fed speech from the beginning of the week and now month to date right here. So overall, this is the time frame that gets my attention. I'll turn more cautious if we get below 402 or so, but for now, there's no evidence that that's about to happen. So I have to look at this market on the intermediate term time frame as it's stair-stepping higher, a pattern of higher highs and higher lows, rising 5-day moving average. On my shorter term time frame, it's innocent until proven guilty, but it's within the context of we're at a potential level of supply. So we have to balance those two time frames and say what makes sense. Does it make sense to chase the market at new highs, or does it make sense to manage risk on your individual stocks? And that's my focus as always. Stocks like ATEN that I'm involved in, Etsy, YOU is starting to break. It's broken beyond the anchored volume weighted average price from the IPO. EE is setting up once again. Stone is setting up and perhaps getting ready to go. So there's still good setups there in a low risk point, and that's my focus. So the NASDAQ, same story. We've got this trend line up above that has the potential to become resistance. I don't look at that trend line and say, hey, that's resistance. It has the potential to do so. But also above that, if we were to get through that level, well, then the next level of interest would be the declining 200-day moving average. If the market makes it through that, then the next level of interest would be the anchored volume weighted average price from the COVID low, and then the anchored VWAP from the beginning of the year. So these are potential levels of resistance. So far, the market is behaving well. This prior resistance was tested, held as support. Now we have a higher low this week. I think that today's low is going to be an important level to measure risk against next week. We're in a seasonally strong time of year right now. The Russell 2000, this is what I'd sketched out on Wednesday night or Thursday night, that I wanted to see it pull back and then rally up, break this high, pull back and go. That was all drawn in advance for subscribers to alphatrends.net. And here we are, showing that the Russell 2000 is likely still heading for this level of interest up here, which is the anchored volume weighted average price from the all-time high. That would put this market up at about 194. Semiconductors, they're still having a little bit of trouble in here with the conjunction of the declining 200-day moving average and the anchored volume weighted average price from the COVID low. That's right here on the weekly time frame, just to see a little bit more clarity. The 30-minute time frame, it's constructive. It's correcting more through time than a stronger price pullback. This is the key level of support right now. It is the potential support. It's been support so far, but if next time it does this, well, then I would turn bearish on this break. If instead it comes down here and then shows that it rallies up towards that high end of the range again, this is the range we're in right now, 213 to 230. That is a good range where we're seeing a consolidation through time. A time consolidation shows that there's still bidders in this market. There's not a big rush for sellers to smash bids. Instead, we're seeing buyers come in. This band of support now becomes more important next week because it's also where we have that rising 20-day moving average. The Biotechs, this is the group that I've been telling subscribers is the first group to show that it's made a higher high above a rising 200-day moving average. So we've been talking about this market all year, that breaking past this level would be important, because when we look at the daily time frame, let's just clean all that up for a moment. What we saw happen this week is, keep an eye on the box up in the upper left corner where it says 200 AVG 200. On Wednesday, the 200-day moving average was 123.41. On Thursday, it went to 123.45. On Tuesday, it was 123.37. So what we see now is the 200-day moving average is now advancing. This is the first of these major indexes that had pulled back deeply, that is making a higher high above a flat to rising 200-day or 40-week moving average. This is where it officially enters a stage 2 uptrend on the weekly time frame. It doesn't mean that you couldn't have made money earlier, but this is where it should be able to sustain a rally. It doesn't mean it has to, of course, but this is how we look at it, and we say, what's our key level in here in the shorter term time frame? If you're a buyer in here, let's say you're an investor and you put your stop below this level, what's your potential upside? Well, perhaps your upside initially is up near about 150, where we had this prior band of support. Would you buy at 137, 138, risk 5 points for a move up to 15 points higher to 150? That's your decision. It's not my time frame. It's your money. It's your time frame. I'm here to point out what makes sense. We have to keep in mind, though, that if it does make it up to 150, it's not likely to go in a straight line. We're more likely that the market will rally up, let's say, to the COVID anchored VWAP, pull back, make a higher low, then maybe have a shakeout, and then do something like this and go and continue higher. So here's our rising 20-day moving average. Here's our rising 50. Here's our rising 200-day moving average. The market has completed this inverted head and shoulders pattern we've been talking about for the last several months. And the height of this pattern, if we were to look at an alternative place, the measuring technique where it might go, let's just call this 105, and we'll call this 135. So the height of this is 30 points. We add that to the breakout point. Let's just call it 130. 130. That would give us a price objective of 160. So the height of the pattern added to the break point is what becomes our target in traditional technical analysis. So maybe our price zone is 150 to 160. And the problem is with 160, you've got to keep in mind that this prior support, there's a lot of price memory there. A lot of people who bought over the course of the year of 2021 are trapped in this market. And if and when it gets back up to there, there's likely going to be a source of supply waiting to break even that will feed their shares out. There will also likely be short sellers waiting for that to happen. The long holders from down in here will start to look at the chart and say, hey, that prior support is likely to be resistance. Let's let's get rid of some of our stock and we'll buy it after a pullback. That's how support broken tends to act as resistance. The energy names also continue to hold on to their gains on the daily time frame. They are correcting through time and they hold up. So things are looking good. Risk management is always job number one. If we break below those 5-day moving averages, that's what causes me to get more defensive. Have a good weekend, everyone.